Once again, welcome. We will delve into his presentation, and then we can have intervention and interaction. Thank you.
Thank you very much, Mr. Ojo. Thank you for giving me the privilege to be here this afternoon to share some thoughts with you, especially in these unusual times.
Once again,
unusual times often show people and businesses that are made of stainless stuff. Or put it another way, tough times show how tough people really are. In effect, coronavirus or COVID-19 is separating the men from the boys among nations, among businesses, among institutions. Those days we used to say people should prepare for a rainy day or make hay while the sun shines. That statement is still very relevant, whether it is for individuals or businesses or nations. Coronavirus, was the business world prepared for it? Was the business world prepared for coronavirus? Or how could the world have prepared for something it did not dream of? There's one word that takes into account uncertainties and risk in any environment and scenario. That word is investment. There's a story that we would like to note. In those ancient days and times, there was a nation called Egypt. And it ran into the stormy water of 7 years of drought and famine. All over the world, everyone was affected by the famine and the drought. There was no production possible. People were dying. Livestock were dying because there was no water, because there was no food. But in Egypt, there was food. Because 8 years earlier, a young man by the name of Joseph suggested a panacea, a way out of a possible drought that was going to come. He foresaw that there will be plenty, 7 years of plenty, and followed by 7 years of severe famine. And he prepared the people and equipped them for that 7 years of famine by suggesting that Pharaoh should invest 25% of all production in Egypt and stockpile them, or put it another way, invest 25% of the productive enterprise into silos and granaries. And over the years, the 7 years of plenty, Pharaoh did that using the instrumentality and the personality of Joseph. And so that singular act saved Egypt. And not only Egypt, but the fledgling young family of Jacob, the ancestor of current Israel. And I dare say that act has made the Israeli nation of today to be a reality. So the Bible has answers for some of these things. And Joseph led by saying, look, you can always prepare for unforeseen circumstances. You can always prepare for uncertainties. You can always prepare for risk by investing. Now, here's what's happening. CNN Business this week had the following to say: why the S&P 500 just hit a record high during a pandemic. If you're asking why US stocks just hit an all-time high, it says, in the middle of a pandemic that's triggered by the sharpest, that has triggered the sharpest recession in history, you aren't alone. What's happening, he asks? The S&P 500, the broadest measure of the US stock market, notched a new closing record on Tuesday, erasing all its losses since February. The index has rallied more than 50% from its low point on March 23rd. Solita Marcel, America's CIO at UBS Global Wealth Management, says, it is hard to believe, but the 2020 bear market is officially over. In a note to clients, the bear market is officially lasted just over 1 month, making it the shortest ever, according to the S&P Dow Jones indices. Now, according to the CNN Business News, companies are rushing to line up IPOs as market hit highs. Companies have been racing to make their public debut as stocks continue to hit new records, reflecting pent-up demand and a desire to move quickly in case the pandemic and US elections send markets reeling again. What is happening? These have been the hottest August for public offerings listed in the United States on record, with 41 deals worth $60.4 billion, according to research from the Agolic. That includes special purpose acquisition companies, or SPACs. The IPO bankers skipped vacation. William Smith, CEO of Renaissance, quoted by CNN Business, said in recent note to clients. Companies like Amazon, Guarantee Trust Bank, Access Bank, First Bank, Nestle Foods, and others posted positive second half reports this year in Nigeria. How did they make it in this pandemic? Remember, from April to June was the period of the lockdown in Nigeria. The answer to all of this is investment. Investment, a lot of these companies invested in blockchain technology that provided a seamless transfer of funds without entering the banking hall. Artificial intelligence has spawned out a new and better way of doing business that require less physical contacts, and companies that invested in these new technologies reap the benefits this period. Meanwhile, a lot of people have found solace in investing in cryptocurrency while they are making money and smiling to the banks. Others who do not think there's anything Bitcoins or cryptocurrency are suffering in silence. Bitcoin or cryptocurrency have become very valuable in this pandemic. And those who invested in them over the years are now reaping the benefit. So what are we talking about? Investment in financial securities. Investment could simply be defined as a way of growing your wealth in a sustainable manner, such that the wealth generated will compensate for the time of growing that wealth and the risk associated with it. This risk is due to uncertainties in the environment. So you see, in periods like this, businesses who have committed funds and human intellectual resources to achieve the desired wealth will have sustainable growth. But unfortunately, poorly done, it could result in losses, which will be catastrophic for businesses. So investment can also refer to any mechanism or process used for generating future income. In this case, financial income or financial securities that include the purchase of bonds, stocks, or real estate property, among several others. That brings us to the issue of financial securities. Financial securities today refers to any financial instrument or financial assets, which include or describe stocks, bonds, money market securities, and of course, the new kid on the block, cryptocurrency. All of these provide opportunity for people to receive future benefits under a set of stated conditions. Financial assets are classified as debt, equity, or derivatives. Debt instruments are also called physical instruments. Debt assets with maturities of less than 1 year are traded in the money market. while long-term debt and equity securities are traded in the capital market. And then, of course, there are those companies or those securities that are traded online, online only. For the purpose of this discussion, the term financial securities covers financial instruments or assets traded in the money and financial markets as well as online. As long as they are traded or invested to generate extra income, then they are treated as financial securities. Those companies that invest some of their reserves in stronger foreign currencies relative to their national currencies are hedging against inflation in order to forestall escalating costs of imported technology, capital goods, and raw materials. So, yeah, if a company decides that, look, we want to be sure that we can continue business in years to come, we can invest in other assets that do not relate to our business. And so they can invest in currencies. And you know, the currency market today is traded daily on the average of $5.3 trillion. Sometimes it rises to $6 trillion daily. And a lot of financial institutions are trading in that field. So how does investing in financial securities become a panacea for sustaining businesses? How? Because the word panacea implies a cure-all or a solution to all problems, or like the Yorubas will say, gbogbo ero. This is gbogbo, anything that, you know, it can cure anything. It's not like that in real terms. For this purpose, we must realize that there's no one size fit all. No particular solution can be final except one, and I'll come to that later. But for now, could investing in financial securities be a cure to sustaining a business? I will say yes, and I will say no. No, because there is no size fits all, no one size fits all to problem solving in the world. Yes, because such investments could solve problems like those that many businesses have faced in this coronavirus period. For example, the business of securities trading have been on, and they have adopted since the late 20th century to the very first decade of the 21st century, investing in infrastructure that enables stockbrokers and investors to remotely trade on various trading platforms of exchanges. Remote trading was not part of the business in the mid-50s to the end of the decade of the 20th century. It wasn't. But companies found that, look, suppose there was a need to trade remotely. Suppose investors wanted to be able to effortlessly look at their investment. What would they do? And so companies started investing in that infrastructure that enables stockbrokers and investors to remotely trade on the various trading platforms of exchanges. Therefore, the capital markets across the globe were prepared for the lockdown, as brokers could log on to their exchanges, their smartphones, and trade on behalf of their clients from their bedrooms, if you may say that. The bank's investment in blockchain technology enabled their customers to withdraw or transfer funds remotely. For the banks that invested in such technology got handsome rewards through higher patronage by their customers. So transacting businesses remotely also reduced a lot of business overheads that cut costs tremendously. So that brings us to the issue of business sustainability. Sustainability focuses on meeting the needs of the present generation without compromising the ability of future generations to meet their needs. It's like saying, look, we have to work hard now to meet the needs of these current generations and also work hard now to meet the needs of future generations. That is sustainability. And it is based on three pillars: economic, environmental, and social, or informally known as profits, planet, and people. So any business that want to be here for a long time to meet the needs of future generations must consider profits, the planet, and the people. So far, a lot of companies have used their profits very well to sustain the interests of their people. Because from their profits, they were able to pay shareholders dividends. However, in order to continue doing that, only part of the profit has to be invested in various assets. For instance, Stanbic IBTC has a program that gives its shareholders the opportunity to say, I will want some cash, or I don't want some cash. I want you to reinvest it. It is called stock dividend. They provide the opportunity to invest part of your dividend in stocks of the company while you take some cash. That way, they're able to build up more funds for crucial investments. And that way, the company is ensuring that it will continue to grow. Scrip dividend is very useful. Sometimes in productive machinery, human capital development, new businesses, or in other income-generating assets, such as fixed income, these needs of long-term, people's long-term needs are met through profits that are provided in form of dividends or in form of reserve premiums that they receive from IPOs. Hence, many corporates have invested, for instance, in the 12.98% Federal Government of Nigeria March 2050 bond. Such companies are planning against uncertainties 30 years from now. They are planning against risk 30 years from now. They are looking at 30 years and saying, if we want to be around for the next 30 years, how do we make sure we are around? And it's okay, fine, let's invest some money in this federal government bond that will be maturing March 2050. So annually, such a company, for instance, investing ₦1 billion in such a bond will be earning 129.8 million in addition to its generated profits. And by the time they continue doing that, they still have their investment in that federal government bond that will be paid to them 30 years from now. So you can imagine if anything happens, there's an emergency in 2050, that company will be prepared. By that singular act, such a business is planning for its financial sustainability. Businesses in the world are bracing up to issue initial public offerings, as we saw earlier in the CNN business report. Why are they doing so? They have seen an opportunity to get more funds now by expanding their shareholder base through equity offerings. The key factor is sustainable businesses, planning today for the needs of future generations. Sustainability of startups. Many startups fail to survive because the proprietors had no idea that they could get in new investors through issuing of equity or bonds. Companies that do that effectively ensure that they will grow. For example, The Google of today, at inception, was able to attract an angel investor by the name Sriram. Ram's initial investment in Google, according to estimates, was between $100,000 to $200,000, because, of course, Google has not revealed the entire secret. But today, he owns 2.8 million shares in Google. As at the close of trading on the 28th of August, 2020, that is yesterday, Google traded on the NASDAQ at 1,639.43 United States dollars per share. So you can imagine if that guy had not sold his shares, what he will be worth today. But you see, that is not the solution. That's not the key thing. The key thing is that Sriram was ensuring the sustainability of Google by investing that money on a startup that actually nobody thought had a future. But you see, his investment had paid off, and it has helped Google to become one of the biggest business behemoths of our time. So investing in corporate and startup IPOs will help such companies to not only survive initial bad pains, but ultimately lead to their sustainability. In the process, the investor will be richly rewarded. Businesses that issue equities usually outlive their original owners. Think of companies like Nestle Foods, Cadbury, Unilever, Guinness, all from outside the shore of this land. Their owners have since died, but their companies have continued to exist. How about our own Guaranteed Trust Bank, set up by Ola Adeola and Tayo Aderinoku? Stanbic IBTC, founded by Atedo Peter Site. Zenith Bank by Jim Ovia, to name just a few. Their owners, those still alive, have through IPOs taken their companies public, thus effectively ensuring the sustainability of those companies. How will I forget to mention FCMB, founded by our own Omoba Subomi Balogun, the living #1 charter stockbroker. He took the financial conglomerate public, thus ensuring its sustainability. But not only that, he gave others, like you and me, opportunities to invest, opportunities to earn additional income outside of our business endeavors, outside of our struggles. During the lockdown, the business is listed on the stock exchanges. Helped a lot of their family, of their investors and families to survive by the payment of dividends to their shareholders. I know a lot who made more money while staying at home doing nothing, but because they had invested in various companies, received their dividends during this period. That is why you can help these businesses survive by investing in their shares directly through their IPOs and indirectly by trading in their shares. Also, that is why you should consider investment in financial instruments, such as currencies. A lot of people trade in currencies today, and they are making money if they know how to do it right. A lot of people have invested in cryptocurrencies, and they are making money, even in these difficult times. But you can, by taking the right decision and investing in the right financial securities. In conclusion, investing in financial securities indeed is a panacea to business sustainability, but the ultimate sustainer of businesses is God, the almighty sustainer of the universe. 1 Corinthians 3. I would like to say that The owners of the businesses we have today have planted, but the ones that we have tomorrow, they are planting. The shareholders have watered. It watered to existence these companies. The God, the Father of our Lord and Savior, Jesus Christ, the one who died on the cross to save us from our sins and who rose again to give us life, is the one who truly gives the increase, and is the one who is the ultimate sustainer of businesses. So if you bring Jesus Christ into your business as your partner, he will take the chaos out of your businesses. You can bet on that. Thank you, and God bless you.
Thank you. Thank you very much. Thank you very much.
Thank you. Thank you. Dipo, thank you.
Mr. Itegboje for
Hello, Dipo. Thank you, Dipo. Yeah. Thank you very much, Mr. Itegboje. That is the former President, Charter Institute of Stockbrokers, and the CEO of the Kings Limited, the Panacea business brokerage firm. I want to once again thank you, all of our participants joining us this afternoon. The question is very, Mr. Itegboje took us through Joseph in Egypt, the challenge of the economic challenges faced by the greater nation. At that time, Egypt was the most powerful nation, and he gave us some lessons on sustainability. Then he moved on to growing investment, the definition of investment, and also spoke about financial securities. Also, told us that can be financial securities can be debt, equity, or derivatives. Then he moved on from there, and he declared that there is no one size that fits all. All right. He was talking about the Yoruba expression called Gbogbo, but I think he meant Awogbarun. That is the one that can cure everything. He declared that there is no size fits all when it comes to the solution to the challenges that organizations may have in terms of sustainability. And he was talking about the importance of transacting business remotely and the rise of that from the beginning of the 20th century, and the need to meet both the needs of the company currently and also the needs of the company, in the future is the foundation of sustainability. Mr. Itegboje also spoke to us that when we were talking about sustainability, three things are very key. You need to look at the economic aspect of sustainability of any business, and then, of course, the environmental issues, as well as the social impact. And you said the concept of sustainability is tied around what he called profit as well as people. And he talked about social investment. Then he went into companies that must outlive their owners. And it's one of the talking points that I want us to look at, that they must go public. They must give opportunities to invest. And he gave a whole lot of examples in our environment, including where I had an opportunity to work under the most indefatigable man of substance and the business. I mean, Otumba Shubumi Balogun, or Olori Omo Oba Shubumi Balogun, if you like, who I had the privilege of, working in First City Merchant Bank before it became First City Monument Bank. And he then told us that it's very, very critical that companies must, sell equities through, public offers so that they can have sustainability. And that is where, and then he concluded by saying that all of the techniques and plans and strategies will not work except God works it, and that the ultimate sustainer is God through Jesus Christ. He being, a man of many parts, belonging to the faith community as well as in business, was able to give us all of those dimensions. So I want to welcome intervention because he is not able to make it to this platform today, but I want to welcome intervention. And one of the areas of interest for me is that most family businesses go public. His examples have been overwhelming, that sustainability of many organizations is tied to their, going public, that is selling their shares so that others can benefit. So I'd like to ask, because there are people here who can give us insight into that because of the peculiarities of their exposures and experience. We have here world-class professionals, economists, world-class entrepreneurs, although we are not many, but they can tell us, whether it is almost inevitable that, what you call mom and pop businesses, for them to be sustainable, or startups, for them to grow and be sustainable, must go public. And the first person I'm going to ask two people before the others will, join into the fray. I want to believe that Dr. Lawrence Itegboje, who is a world-class economist, is accountant is here, and I'll be very glad if you can intervene. There is also Mr. Sembore, who is also a banker, a financial services expert. Before we start bringing this to a close, Dr. Itegboje, you want to unmute and let's have your input. Let's have your intervention. Thank you. Hello, are you there, Dr. Lawrence? Is Dr. Lawrence there? Well, I'm not sure he's there. How about Mr. Sembore? I'll be very glad, Mr. Kunle Sembore, if you can have your intervention. Why must privately held companies, why must they go public? Can't the company be ultimately privately held?
Yeah, good afternoon. Okay.
Hello, sir. I'm around.
Okay, first Dr. Lawrence and then Mr. Sembore. Thank you very much. I'll also be glad. I'm going to bother Reverend Yomide Abraham, who is bivocational, who has played a significant role in the legal profession before going into ministry. And then others can also join the conversation. Dr. Lawrence Itegboje, thank you.
Yes, sir. Theoretically, I'm looking at it from the theory.
Okay.
From the theory, yes. I'm not looking at it from the practical because I'm a theoretical man for now. Theoretically, it is good for business to go public.
Okay.
This is because it will bring in more expertise, people with various knowledge from various fields of human endeavor.
Okay.
2, it will also bring in more capital. Great. 3, it will bring up managerial skill. You are able to hire qualified personnel that will manage the business the way it should be managed. And 4thly, you talk about board of directors. You are bringing in seasoned managers that can manage the one-man business where you sit in your house and say,
Well, it's a broadband challenge, Dr. Itegboje. We're probably going to get back to you.
My mother said
wow. I hope, am I the only one not hearing Dr. Itegboje very well?
business.
It's a
Let it
major
fall down.
problem.
It's a major,
I can hear you very well. I hear you.
Yeah, but
Hello, sir.
you are breaking.
Hello, sir.
Lawrence,
I can hear you.
Yeah, but you are breaking. You're back now. Can you, I mean, I'm so excited at your train of thought and
I can hear you.
Okay. No, you were dropping at the time. That was a challenge. Can you wrap up? Then
Okay.
we'll go to
As I was
Mr.
saying,
Adekunle Shembore, and then Reverend.
Hello, sir. Hello, sir. Hello, sir.
We can hear you. Speak on.
Okay, as I was saying, a public company is better managed than a private company. All over the world, it has shown. Like Coca-Cola has spent over.
Sorry, I just dropped off there. I'm back. So you were saying for the long-term sustainability of
a century.
Yeah.
If it was a private, we would have given up. Mercedes-Benz has a, oh God. Hello? Hello? Hello?
Hello, Brother Lawrence. I can hear you.
Yes, as I was saying, a publicly owned company is better managed than a privately and individually owned company. I was giving an example like Coca-Cola that has spent over a century. Mercedes-Benz is almost a century old. If not for the fact that they are a public company, the death of the owner would probably have brought the company to an end. And so a lot of people don't want to go public because they want to exercise continual control. They are not helping themselves and they are not helping the economy. So I subscribe that private companies should go public. Number one, they can employ more people. Number two, the company can grow and be sustainable.
I'm back.
Thank you.
Thank you very much, Dr. Lawrence Imiokwara. Thank you for your insight. Can we hear from Mr. Adekunle Shembore? Mom and pop, they must go public, and the question is that the only way to sustain businesses or business sustainability, particularly in challenges. Then we're going to go into personal investment, and Mr. Mike Itegboje also mentioned some things. We're going to open that up. I'm also glad that joining us this afternoon is the number one risk manager, Mr. Olayinka Odutola. This is getting interesting. So, Mr. Shembore, can you
Thank you, Pastor. Listen.
Yeah. Good afternoon, sir. Yeah.
Good afternoon.
Good afternoon. Yeah. Just to add to what Dr. Lawrence had actually, he said a lot. The issue of key man risk, which is the perceived danger, the perceived challenges of key man risk that when the owner or the person who conceived the business dies or is removed from the business is not sustainable again, is removed when companies, take the step, the opportunity to go public. Because like some of the things Dr. Lawrence has shared, it creates room for, more capital inflow. It creates room for more technical managerial expertise being deployed. And it gives a lot of people, that, perceived understanding that, this is not a family affair thing, so to say. It is being, so there's opportunity. It creates that enlarged opportunity, to diversify, to enlarge. So those are part of the. However, it's still you. I mean, you ask the question, how is that the only way to go? Not necessarily. You see,
Yes.
you can have your business. It is important even for family business. If you create structures, if you establish structures, you know, your books are there. You see good family businesses, because if you do not have your books in place, you can, for instance, not borrow from the banks. It becomes difficult for you to approach the bank for liquidity. So, but if you have structures in place, even for a small family business, you still can make giant strides.
Yes.
However, you can go further, you can enlarge further by way of going public. And like I said, it eliminates that danger, that fear of key man risk, and creates room for more capital inflow, more technical, you know, initiative being deployed. Thank you very much. Thank you.
Hello, can you hear me?
Yeah,
Yes.
Okay, thank you, Mr. Shembore. Reverend Yomide Abraham, I'm going to get back to you, but there is something that is of interest to me. I think we've mentioned it here before, maybe from the legal purpose.
Network problem here.
The Odutola industry, Odutola industry with us. Can you hear, Reverend Abraham? Can you hear me?
Hello.
Hello, can you hear me?
Yeah, it's breaking, but I can hear you.
Hello. I can
hear you now. Yes, all right.
Oh, okay, great. Odutola and the rest of them. You know what Dr. Lawrence and Mr. Shembore are telling us that is that, look, you know, to sustain business for a long term, it is a good thing for you to go public. But Mr. Shembore is saying, look, if you can put structure in place, you can still work. So what happened? We'll be glad to have your intervention. What happened to the Odutola and the rest of them, the empires built by some of our
you just spoke my mind when you mentioned Adeola Odutola Tire Company, because my wonder has been this. All that they have said, the contributors, very beautiful, very fine, deep insights. But the problem is more than that. There is the African mentality. There is this paradigm shift that we need in Africa. Indigenous African companies have this problem. We are yet to be weaned and delivered from this problem of children or other people inheriting from their parents and sharing what is there, sharing assets, rather than looking away from immediate gratification and satisfaction and pecuniary gains and looking into the future. I've been a lawyer to one or two families that the man was quite doing well in the business. You know, I remember the Katore Press Limited in Lagos, etc., etc. And immediately the original owner, limited company, dies. You begin to see the clamor. How much is the asset of the company? What do they have in their financial figures, etc., to share it up? So my contribution would be that we need to overcome that African mentality. This thing that looks like a curse on the continent, because how many indigenous African companies have been up to 100 years in Africa? First Bank is not an indigenous African company as far as I'm concerned, or the old bank.
Right.
So I think my own contribution, we need a shift of paradigm. Africans need to begin to migrate from immediate satisfaction to invest in the future, running companies by legacy, leaving something behind for generations and generations. I think that will help matters more. All that the contributors have said are valid, but we need a shift of paradigm. Thank you.
Thank you. That's one of the reasons why we keep this going. I mean, these are things you may not find in Harvard Business Review, Harvard Business School, because we are talking about the context of business in our own environment and the challenges that we have been facing. Now, Yes. And then let me before you go, sir. I'm so glad to have that. I said the people here are deep wells that God has deposited quite a whole lot of water into that. We can dig and dig. Now, as someone who is a minister for non-for-profit, for example, the people in the faith community, if
God
you're a
bless you.
founder of a church, what is this? Is there a good sustainability strategy to put your son as your, as a next in command in
As a
preparation for
successor.
takeoff?
Yes, it's
Yes,
still the
yes,
same. Yes, it is still the same African mentality that has entered the church. And some are trying now, but we need to see all the churches that are doing well presently, for example, in Nigeria, let the present man of God, when God calls that man home, is then we will see the legacy as we're building. Whether other people will be able to manage it. In some churches, when the founder is getting old, people are scrambling. I don't want to mention figures now. In fact, in some places, people are already taking over some churches outside Africa. The very big church that is African established. So the mentality has to still change. I think people in the faith community, we need to go back to know who the owner of the church is. For me, I have a problem with somebody beating the chest and say, I'm the founder. I know how much I used to invest in this place and all of that. When the I is taking the place of Christ, we always have that problem. Because you invested your money and your time and everything, you want the continuity. You want your son to be the next bishop of the church. You want your wife to be the next one to take it over. And in this climb, that is still the problem. There is a church in Chicago. I don't want to mention the name. The man he founded the church at 21, was turning 60, and mega church, 21,000 attendants at the weekends. And the man said, look, he was leaving Chicago. He was going outside the area. If they don't have somebody to take over the church among the present leadership, they should hire a pastor from outside. He said that 60-something does not want to have influence again. Can that happen in Africa? So we still need that shift of paradigm again. Unless we realize that Jesus, who says, I will build my church and the gate of heaven will not prevail. Unless we make him the owner and the founder of his church, that the one who God uses to start the church is a planter. You regard yourself as a planter, not a founder. That Jesus is the founder, is the foundation. Otherwise, that problem will continue. People will struggle. They will consider the financial muscle of the church, who to sustain the current general overseer, etc., etc. The Lord will help us in Jesus' name.
Thank you very much, Reverend Yombe. I'm so excited at the insight that we're getting this segment, because this series was delivered about a year ago, but we felt, hey, there's a lot in this to look at it. I'm going to ask a world-class risk manager, to look at. Let's come by a little home, and then we get to a close. There are different kinds of investments to look at the future. And Mr. Itegboje told us that you can't say there is no size that fits all. Many of us at the height of the boom in 2000, and when all the banks were recapitalizing, many of us were either consultants or we bought into shares that went bust. As a risk expert, what will you tell the individual investors, who are investing in securities or some other things? What would be your counsel so that we don't end up? I mean, I wish I spent my money to buy some other things instead of buying the shares that went bust. The one that was good, we bought, we sold. The one that wasn't, I have witnesses. I have, a couple of witnesses on this platform. We bought for individuals, we bought for company, we bought for staff, and they all went. First Bank was 30. We sold it. We're part of it. We sold it at 33, and the current price, I haven't checked. What it is today. So, what would be your Mr. Olayinka, what would be your advice to those who are investing? Individuals now. We're not talking about, we have looked at business, but we're looking at individuals. Are you still there, Mr. Dusala? Hello?
Yes, so I wish this call pass over me. I'm there.
I'm sorry. There is a boogie of the experts. When you have experts all over the place, you need to pick
It
their
is
brain
well,
to
Pastor.
provide
Thank you
solutions.
very much. Yeah, thank you very much. God bless you. I mean, part of the conversation, though I came in very late, but at least I was able to gain something.
No
And
problem.
listening to our revered Reverend Ayomide Abraham, I don't know the list of sand that is being touted about. I don't know whether it's going to be there because I believe that our Reverend will be a senior advocate of Nigeria right now. Yes, sir. God bless you, sir. Yes. Still talking about investments. Honestly, especially in this part of the world, especially let's look at Nigeria. There is no textbook approach to our managing investment risk in Nigeria, especially when we talk about stocks and shares, right? Because we have tried a lot of strategies, just like you have said, buying for people, trusting that some shares will, make it well, and all those things, and eventually some of them actually disappoint. But one thing we should know is that it is not at times it may not be the share itself. It may not be the company itself at times. At times you look at the overall environment. Like for instance, now there is nothing we can do. I stand to be corrected. Between now, as election is fast approaching, and politicians are building up their strategy and tactics, and whatever, right? The value of shares, the kind of tendency for share prices, to be doing well in the market, to be rising, to be appreciating on an average general basis, the tendency is relatively low.
Okay.
From my thinking, I'm talking practically, you understand? Because there are other things, look at the level of insecurity in the system, look at the politicians, you can't trust their their plan for Nigeria. Nobody can say. In these days, when people are even talking about people flight, you understand, right? Initially it was capital flight or movie, but nowadays, people people
It's
flight,
human beings.
right?
The airport,
Human beings.
the airports are overbrimming
Human
with
beings.
people.
Exactly, sir.
Mm.
To the extent that you want to apply for visa now, visa that in those days you apply and they will call you now. They will tell you that 2024 set, just like you are going to graduate 2023 set for interview. Not that they are going to give you for interview. And those who are part of the period of traveling here and there, just normal drop box and whatever. As of today, what is the situation? I was giving a kind of a briefing yesterday at the hotel, and we were talking about country risk. The country risk in Nigeria is getting higher and higher and higher. When it gets to a kind of, intolerable, if I'm correct, level, I can tell you, right, a lot of things will happen. So whatever happens, if your shares are caught in that kind of web, what do you expect?
Wow.
You understand? So between now, still good now, still good till December, January. By the time it's coming to, let's say, 1 year, right? 9 months to the election in Nigeria. You understand? You find out that a lot of things will be happening because there will be a lot of speculative activities going on. There will be a lot of speculation about what's going to happen. Is it PDP, is it APC? You will see, a lot of things, strange things that politicians will be doing. So all these things affect shares. That's why, for you to have an objective analysis of what's going to happen in shares today. Hey, stockbroker and Shishel. You understand? You have turned, there's one thing that we should
say
say.
that in English. Not to say
Yes,
that in English.
yes, sir. Again, you say that, sir. Abiku Sologun Deke. You understand, sir? Right? Abiku Sologun Deke. Pastor Tunde, please, you are the one that will help me to translate this thing easily.
That is Greek to a lot of people.
This Ologun is an expert, sir. Ologun is an expert. He's an expert. He has done it before and whatever. But when it comes to Abiku, hey, Ogbanje child, everything, that kind of thing, that is the situation. That kind of thing that may happen anytime from now. You understand? So objectively, right, at times it may not be the company and whatever, but ordinarily, if everything is stable, then you now look at the company, right? The companies, how have they been doing? How have they been doing their business, right? And how have they been paying dividend in the past and whatever, that kind of thing, their capital appreciation, do you study it? Some of the time we just hear that, oh, shares or move, and we invest in it. You understand? Whereas, one of the things we can do to mitigate this risk is to get, at any point in time, registered, qualified, licensed experts. That is their stock advisors. You understand? People like our Pastor Mike Itegboje, who is he was a past president, right, of Chartered Stockbrokers. You understand, right? So when everything is cool, a little bit, you understand? I think, you can continue to advise that, okay, these stocks at any point in time, they will know about the volatility in the movement of the price of the shares and all those things, that they will tell you, they will advise you, okay, this one, for now, you understand, I can tell you can bet on, is it MTN shares? And they have information, about what's going to happen, right? Yes. They have information that, okay, in the next something, MTN is going to do this, right? This bank is going to do this and whatever. So at any point in time, don't just gamble, right? We need to make sure that we listen to expert advice on daily basis, on regular basis, you understand, before we can take decisions. But as of today, like I said, Abiku Nigeria is in solo good, you understand? Thank you. Pastor, today I'm not hearing your voice again, sir. Hello, sir. Wow.
Thank you very much. Thank you very much, Mr. Obitola. We're going to wrap this up. He went to Aso Rock and he said, in 2023, hello, can you hear me?
Very well.
Can you hear me?
Very well.
In 2023, that God should give us, I know I'm talking to people from the faith community as well as business and professionals, God should give us a president like our current president. And another governor from South responded, I think a couple of days later, and he said, no, we don't want, I don't want anybody to respond, but I think it's a takeaway. 2023 is close by. Mr. Odutola is talking about country risk. There are young entrepreneurs, both in terms of age and the age of their businesses on this platform. They will want to know, is it to fight or to fly? Is it to take? A lot of young people are taking off because they don't see home. So we need to, these are issues that we need to take away as we bring this edition of Touchstone Business Sustainability to an end. And we can, in addition to praying, ensure that we get involved in the political process so as to get the kind of leaders that will make our country attractive for businesses to grow as well as for human flourishing. And it's on that note, I'd like to say a huge thank you for spending your afternoon and your data, I must say, with us. And for all those who have intervened, I want to say a big thank you to Dr. Lawrence Emil-Oparia. He's a world-class accountant and academic. I want to say a big thank you to Mr. Kunle Shambore, a banker, a thoroughbred banker. Reverend Ayomide Abraham, a lawyer, a turned minister of the gospel, as who is always there for us. And then, of course, the president of the DG and CEO of the Enterprise Risk Association. I hope I got that right.
Yes, Enterprise Risk Management Association. You're correct.
Thank you very much, Mr. Olayinka Odutola. Until we come your way again next Saturday, and it's going to be very interesting. Please look out to the conversation that we are going to have. I want to say a big thank you. I want to say a big thank you
very much.
Thank you, Mr. Itoan. Mr.
Thank you, sir.
I'm so glad to see you. Mrs. Olayinka, so glad to see you. Mr. Akinyele Oludare, glad to see you. Engineer Adeni Oladiran, once again, congratulations. thank you very much for joining us this afternoon. Please, if I've not mentioned your name, forgive me. Of course, Reverend Itegboje, who is, you can call him one of our patrons because of the level of encouragement that gives us Saturday in, Saturday out. Thank you very much.
Thank you very much, sir. Thank you very much.
Thank you very much, sir.
You, sir.
Thank you, sir. I want to say a big thank you for, sir. I will have harassed Reverend Itegboje, but you had already told me that you will be in a meeting. I wouldn't want to to harass you too much. Until we come your way again, I want to say a big thank you to my colleagues, the Touchstone Hand, Muiwalabi, Dikpo, Ogundipe, and the gentleman we call Bishop Buki. Thank you. And I pray that your weekend will be more flourishing and fruitful. Have a great weekend and God bless.
Thank you. God bless you, sir. Thanks.
Bye.